Greetings, everyone. It's Liberty Call for Thursday, September 8th, 2022. I apologize if my energy is a little low. Just had an infusion, so I'm a little tired and quite a bit sore from being 2 weeks past where I normally get them. So anyways, hope everyone's having a great day out there. Markets looked pretty good today. I'm going to go through a few quick items and wrap this up fairly quick today. So if it's your first time watching, give me a big old thumbs up, like, share, subscribe, all that good stuff. Be sure you get alerts so you can watch this on a daily basis and get what's going on in the world. So, all right, well, let's go ahead and dive in. The Dow Jones was up 0.61, closed at 31,774. S&P 500 was up 0.66, closed at 4,006. NASDAQ was up 0.6, closed at 11,862. Small caps are up over 0.5%. The VIX fell another 4.18% today. It's currently at 2361. Moving over to the other Americas, Canada was up 0.89, Brazil up 0.14, Mexico up 0.7. Moving over to Europe, Germany down or basically flat at down 0.09, UK up 0.33, same with France. Euro stocks was up 0.29, Netherlands was up 0.47, Spain up 0.78, Italy up 0.88, Switzerland down 0.14, and Portugal up 0.47. Russian indexes were both down again today. The MOEX down 0.47 and the RTSI down 0.48. And moving over to the Asian markets, Japan was up 2.31, Australia up 1.77, New Zealand up 1.36. And it looks like all the Chinese markets were in the red. The Shanghai was down 0.33, the SESE component down 0.86, the China A50 down 0.28, and the DJ Shanghai down to 0.26. And the Hang Seng down 1% even, and the Taiwan weighted came in down 1.2%. All right, so that's everything as far as all the indexes across the globe. Let's go ahead and breeze through today's market recap. S&P 500 rises in choppy trade as banks shine and big tech wavers. The S&P 500 climbed Thursday in choppy trade as investors weighed up weakness in big tech and strength in banking stocks amid rising treasury yields after Federal Reserve Chairman Jerome Powell vowed to continue to fight against inflation. Tech struggled for direction as big tech, including Apple and Microsoft and Alphabet, remained in the red after treasury yields climbed on hawkish remarks from Powell's vowing to persist with rate hikes. Again, I don't know why. What would give the financial journalists any sense that they were going to slow that down? But hey. Powell said the Fed reiterated the need to persist with rate hikes to battle inflation, vowing to keep at it until the job is done. The central bank wants a period of below-trend growth, Fed chief added. Other members, including those who lean more dovish, have also struck a hawkish tone. Chicago Fed President Charles Evans on Thursday backed the idea of lifting rates to 4% by the end of the year. So, wow, that's a nice little jump. Rising semiconductor stocks helped to keep the lid on losses in tech, underpinned by a 2% rise in AMD. Stifel initiated coverage on AMD with a buy rating and set a 122 price target, forecasting a more than 50% rise from its current price. So we'll see what happens there. Financials were pushed higher as banking stocks racked up gains on treasury yields. Citizens Bank, Key Corp, Fifth Third Bank Corp were among the top gainers in the sector, up more than 3%. Rising treasury yields or rates boost the net interest margin of banks, the difference between the interest income generated by banks and the amount of interest paid out to depositors. Healthcare was also up 1% by a 19% surge in Regeneron Pharmaceuticals after it announced positive results from its late-stage clinical trial on its eye medication, Eylea. Moderna had climbed more than 3% after Deutsche Bank upgraded its rating on the pharma giant to buy from hold after revising estimates higher following the latter's recent strong quarterly results. Energy steadied after severing a rout on Wednesday as oil prices rose more than 2%, though ongoing concerns about energy demand amid slowing global growth weighed. The rebound in oil prices comes even as crude oil inventories unexpectedly increased by about 9 million last week, confounding expectations for a draw of 250,000 barrels. In meme stocks, GameStop said it's struck a new partnership with cryptocurrency exchange FTX to join work on e-commerce and online marketing initiatives. The news overshadowed the video game retailer's quarterly results that showed a wider than expected loss. GameStop was up more than 6%. All right. So, some good news out there on the jobless front. U.S. weekly jobless claims fall to 3-month low. The number of Americans filing for new unemployment benefits fell last week to a 3-month low, underscoring the robustness of the labor market, even as the Federal Reserve raises interest rates. Initial claims for state unemployment benefits declined 6,000 to a seasonally adjusted 222,000 for the week ending September 3rd, the Labor Department said. Data for the previous week was revised to show 4,000 fewer applications filed than previously reported. And on the extended or long-term unemployment, claims remain well below the 270 to 300,000 range that economists would signal a material slowdown in the labor market. However, the number of people receiving benefits after an initial week of aid, a proxy for hiring, increased 36,000 to a nearly 5-month high of 1.473 million in the week ending August 27th. So the jobs numbers still look good. Companies haven't started slashing and burning yet. So as of right now, it looks all right. And a little more good news. Consumer credit unexpectedly slows as new auto loans stumble on soaring rates. 1 month after the second biggest monthly increase in consumer credit in U.S. history, which in turn was just 2 months after the biggest surge in credit card student/auto loans on record. In July, the growth in consumer credit unexpectedly slowed to just $23.8 billion, down sharply from $39.1 billion in June, and the second lowest monthly increase of the year. Probably has something to do with rates going up. That'd be my guess. Not to mention the biggest miss to consensus expectations, $32 billion for July since January. And while the slowdown was partially a result of some $10.9 billion in revolving credit in June, which actually is not that bad at all, and was one of the highest monthly increases on record and the fourth highest of 2022. The biggest surprise was the sudden slowdown in non-revolving credit growth, which was cut in half by $24 billion, or from $24 billion in June to one of the highest on record to just $12.9 billion, the lowest since January. And while we have to wait until next month to get a breakdown of student versus auto loans that make up the non-revolving total, it's almost certain that in July we saw the first direct impact of soaring interest rates on auto and to a lesser extent college loans, which are suddenly becoming prohibitively expensive. A few more months of this collapse in demand and the impact on the U.S. auto sector could be dire, but at least new and used car prices will plunge following, allowing the Fed to start hinting at a coming pivot and making the rich richer all over again. All right. Well, that's everything I had for today. Had a lot of good news. It's unusual. But hope everyone has a fantastic evening. I'll be back tomorrow with the weekly wrap up with all the weekly totals and data that came out this week. And I hope everyone has a great night. And if you need anything from me, please go to dsafinancialgroup.com. All my contact information is there. Y'all have a good evening. Bye-bye.